talk about the defense pack. We've got Amit Anwani, research analyst at PL Capital Group, now joining in. Amit, thank you very much for joining in. The stock in focus today is going to be Mazagon Dock. Parikshit was earlier telling us that he's picked up from sources that the Ministry of Defence has granted an approval to the company to initiate cost negotiations with Thyssen Group for the construction of 6 submarines under P-75I project. And this is for a nearly 70,000 crore project. The stock is up 3.5%. How big will this be for Mazagon Docks? How does it change the financials? And do you expect this order to go through? In what shape and form?
Sure. Hi, Rima. Thanks for having me. So first of all, this is not under my coverage, but the company has roughly about 40,000 crore order. And this large order which you mentioned definitely was on the radar. And this will significantly boost the revenue growth for sure. But this is a very long gestation order, roughly about last time we saw all the submarines, the typical duration of delivery was between 8 to 10 years. And I'm expecting similar for this kind of orders as well. But definitely this will substantially boost their top line growth for sure.
It'll boost the top line growth, but it's long gestation.
Yes.
Amit,
yes.
Generally, the defense stocks, while have given very strong returns over a 3-year, 5-year period, given the policy support, the expanding order books, in the last 1 year, though, growth, has moderated the returns. In fact, HAL is only up, I think, 6%. Paris Defense, 5-6%. Data Patterns is down nearly 10%. From here on, under the stocks which are, in your coverage, how do the valuations stack up? What are the growth prospects? And which stock are you most bullish about?
Yeah, see, the growth prospects definitely are quite strong. As you see, for instance, HL, the order book has grown substantially from 30,000 4 years back to now roughly about 250,000, including the recent order 97 Mach 1A. And see, we are hearing a lot about the indigenous jet engines and many other programs for HL, including AMCA and even the Mach 2 LCA. So pipeline is quite robust, considering that we have to replace a lot of aircrafts, maybe roughly about 350 to 400 over the next 15 years. And on the top of it, the government has been supporting with respect to localization and reliable supply chain. So definitely, structurally, there's a lot of opportunity. With respect to valuation also, if you see, I think the defense electronics spec, if I see, the multiples are still between 38 to 40x, including Bharat Electronics, which is at about 41x, and all other defense electronic companies are trading on that orbit, roughly about 40x plus. The shipbuildings are trading at about 30x on an average. And as you rightly said, MDL is something where the order book is drastically changing, and there's a good outlook for other two companies also. Currently, valuation-wise, HL is my top pick, which is trading at about 32x on my number. And I believe that with a longer-term perspective, definitely there's a good double-digit sustainable growth possible there.
Okay, HAL is something that you like at these valuations. Hi, Amit. Good morning. Good to see you, Ben. You have a sell call on any of these defense names?
Not currently. So we have Bharat Electronics under coverage and HL under coverage. Currently, Bharat Electronics has a hold call. The reason being that obviously the valuations have rallied kind of 50-60% over past 6 months. But we're long-term positive whenever there is a time correction opportunity. Since I explained to you, defense electronics is something which is very critical, even for the Sudarshan Chakra, which is announced, which is a multi-layer defense system with a lot of avionics and surveillance systems, cybersecurity will be required. So defense electronics definitely directionally are in for a very long-term growth. But current valuations definitely for Bell looks slightly rich to me.
Amit, what's the investor view now on defense stocks right now? People who are willing to invest money in. As we spoke, the sector has given very large returns over a 5-year period. But now increasingly there appears to be a tilt away from capex into consumption. so that sector bias or preference, which benefited defense so far, may now be shifting towards consumption. Are you picking that up, and is that going to moderate or change the way investors are looking at defense?
Looks definitely the kind of initiatives which have been taken over past quite some time, including the GST reduction. Definitely, they were concerned also about the capex impact on capex. But I believe for defense, definitely there would be a sustainable capex increase. So apart from focus on consumption, I think defense. We have seen the announcement on Independence Day. We're talking about the localization of jet engines, which is quite a big feat, and we're talking about the multi-layer air defense systems. And we have seen the kind of challenges we have or the wars we have seen in past 3 to 4 months. So definitely defense, as I said, will be in focus, and government has been focusing critically on this sector. I don't think there would be significant change in how the government perceive this sector. There could be here and there with respect to order finalizations, but the pipeline is quite robust. Government is targeting 3 lakh crore turnover from defense, annual turnover from current 1,50,000. So there's a massive 17-18% CAGR we are talking about over the next 6 years for defense sector.
Amit, we appreciate you joining in and giving us your view. Wishing you a good day ahead, and we look forward to chatting up with you in the coming weeks as well.